Did you know that the spring selling season, typically in most years, you have about 40% of all transactions of homes sold throughout the entire year take place between the months of March and June? Did you know that? Even as a seasoned real estate agent, I didn't know the figures were that high, close to half. I know that the spring buying season is always a frenzy, but I did not know that the numbers were that high. But this year, I believe the spring housing market is going to be a ghost town in most cases. Now, quick disclaimer, guys, after a million times saying this, I'll say it again. If you live in an area where homes are still affordable, it's probably not going to be the case. But for areas where homes are not affordable and interest rates have made it even more unaffordable, it's going to be a ghost town. Because now that mortgage interest rates are once again hovering in the 7% range, we already saw the mortgage applications from this drop to a 28-year low last week. And now, to top it off, after we heard Jerome Powell talk earlier this week saying how there's more work to be done and that interest rates are going to have to go even higher, this is likely to push mortgage rates even higher. It's not a guarantee, but it is a very high probability. As the Fed increases its federal funds rate, it typically has a similar effect on mortgage interest rates as well. And say, for example, if you can get a 6.4% interest rate right now and it goes up one additional percentage point to 7.4%, that has the same effect on your monthly payment as if home prices just went up another 10%, guys. And that's basically the sole reason I think that this home buying season this spring is going to be a complete ghost town. Because as interest rates go up, it's basically like home prices continuing to go up. And you have home sellers that think that home prices can continue to go up in this environment, which is next to impossible in most markets. And you have buyers that say, I already couldn't afford it at 6.5%. I definitely can't afford it at 7.5%. And so with those dynamics in the works right now, I just think you're going to see the lowest spring buying season than we have seen probably since 2008, right? Just like everything else. You're just going to see everything drop off a cliff this year, guys. This is the year. It doesn't mean that this is the year where home prices are going to be the most affordable ever. It means that this year marks the turning point of where everything changes. And this is just going to be yet another change that you can basically guarantee is going to happen. You even got Glenn Kelman, the CEO of Redfin, coming out and saying that this is the most he's seen home buyers take a step back from buying homes in the 17 years that he has been with Redfin, guys. I didn't even know that Redfin was over 17 years old, but that's just been the common theme, right? It's the lowest amount of sales that we've seen in X amount of years, the lowest amount of applications that we've seen in X amount of years, the highest amount of mortgage interest rates that we've seen in X amount of years. I mean, the list is endless. And the reason why I'm starting the video with this point is because 40% of the home sales take place in just those few months of the spring. That is crucial to the health of the housing market, guys, because if we don't see those sales figures come in this spring, then you're likely not to see them come in at all throughout the rest of the year, because that's when people need to move. You know, that's when people are looking for a new place before kids start school again the following school year. That's when the weather's also starting to get nice up north, and it's a good time to go out and looking at properties. And if this window of opportunity is missed, then what it's going to do is it's going to keep a lot of properties on the market that otherwise would normally sell this spring. And I think the only thing that can save it is mortgage interest rates going back down at or below the 6% range throughout the selling season, which is highly unlikely to happen, especially given what Jerome Powell just said and the fact that the next interest rate hike is likely to be higher than what was previously anticipated. So you have pretty much every economic factor working against the housing market right now, except for low supply and low unemployment. Those are the only two things right now that are working in favor of the market. And so the other thing that people need to understand is also having lower home sales during this spring run-up that we usually have is going to impact the economy in other ways as well. Typically you have people that just bought a new home during this time of year go out and buy new furniture for the house, all kinds of new appliances and knickknacks and things they need for furnishing the home and getting it ready to live in, that you're not going to see people go out and buy because of this. It's just interesting how once we get into the swing of this recession like we are now, you start seeing all of the pieces start to fall like dominoes that just put everything into place for us to have this perfect recession. And it just seems to be becoming more and more apparent week after week, really. But I have to say, guys, I have to hand it to these mortgage lenders that are basically doing anything and everything right now to convince people that it's still a good time to buy and give people reasons why they should still be looking at buying even in this environment. And this one, I actually have to admit, is a pretty decent reason, but it still is one of those things that you shouldn't be banking your entire future on. You know what I mean? Because when you're buying a house or your next home, whatever it is, condo, townhouse, whatever, you don't want to be banking your entire future of holding that asset on just one thing. And here's this most recent email I got from the Fairway Mortgage Company here in Florida. I'm getting these weekly emails from these guys, and every week I'm just kind of blown away at the things they're putting in there to tell people why they should still be buying. So check this one out. Tip of the week. With interest rates climbing higher again, new homeowners will likely exceed the standard deduction on their tax returns, and the mortgage interest deduction will take on a larger role than in the past. When discussing the advantages of buying versus renting, make sure to consider the tax implications. Did you know that a borrower with a $500K loan at 7% might receive an additional $8,000 in tax refund just in their first year of owning the home? Almost $700 a month. That is something to consider. And by the way, they mentioned here at the end that mortgage rates are back up and back up above 7% for the first time in months. And this email is only a few days old. So on the one hand, Fairway has a very fair point when it comes to getting a higher tax return refund because you're paying more interest on your loan than before. Okay. Sure. But the problem with that thinking, guys, is it just ignores the overall bigger problems that we have right now when it comes to inflation, when it comes to home prices starting to fall in many areas across the country and purchasing an asset that's a falling knife. The recession and how many people have been getting notices of layoffs or, taking pay cuts or whatever, and having this monster mortgage payment that's higher than it's been basically ever. In an economy like this, one wrong move, one mistake, one hiccup can just put you in the poorhouse. And so that's the part of this that they don't acknowledge, that you're really taking on a tremendous amount of risk. And yeah, it's great if you get that extra tax return benefit because you have a higher interest rate than somebody that doesn't have that. But to me, it's not a reason to gamble on your entire future. You know what I'm saying? Some people might disagree and say, well, yeah, I'd rather get that, tax incentive. This is a great thing, and I didn't even know about this, and this is going to be the reason I'm going to jump in and buy. Last week, it was because Zillow predicts that home prices are going to go up 23% in the next 5 years, which is a total joke right now, but that's what they said last week, So every week they're coming out with things that they're saying in order to try to get people to believe that now's the time to jump in. And you can choose to believe whatever you want. And here's the thing too, guys, about FOMO. When it comes to FOMO and the level of FOMO that some people probably still have out there, if the FOMO is weighing on you so much that you cannot bear the psychological angst that comes along with waiting right now and hoping that prices are going to go lower and you're going to get a better deal in the next couple of years, then jump in, go with this, Don't do it because I said so or anything else. Do it because you can't have it any other way, all right? But be prepared to live with the consequences that could come from that when it comes to the value of your home going down, getting potentially laid off or transferred somewhere else with your job, and now trying to figure out what to do with this property you just bought, and things like this. So, These are tough decisions that people have to make right now, and no one can make them, unfortunately, except for you. I feel like I'm here to help guide you and give you information to help you base your decisions off of, and that's it. You know, I can never tell any one individual person exactly what to do. You know, people write me in the comments and I give you my opinion on things sometimes, but at the end of the day, you got to figure out what's right for your own life and your own family and your own finances. And by the way, guys, if you are somebody who's looking to buy or sell this home buying season, be sure to check out my link in the description below. I can hook you up with a real estate agent nationwide, anywhere in the United States, if you need a realtor. So make sure you check that out. It's a free service to you, costs you nothing, and I'll get you in touch with somebody right away. And for people who are looking for an affordable place to buy a home, you know, that's the number one complaint I see all the time is, I can't afford anything, you know? And my response to that is, move, you know? Go somewhere else where you can afford it, because there's plenty of places out there that are still very affordable. In fact, check out this list, guys. Here's the 10 most affordable housing markets right now, according to Bankrate, okay? You got Macon, Georgia, median home price there, $189,000. Davenport, Iowa, $185,000. Topeka, Kansas, $175,000. Utica, New York, $169,000. Charleston, West Virginia, $165,000. Erie, Pennsylvania, $159,000. Terre Haute, Indiana, $139,000, guys, $139,000. Same thing in Peoria, Illinois, $139,000 to buy a house. Saginaw, Michigan, $129,000. And Youngstown, Ohio takes the cake at only $115,000 to buy a home. And I know a lot of people are going to say, oh, I don't want to live there. I don't want to live in Ohio. I don't want to live in Illinois. I don't want to live in Indiana. I don't want to live in West Virginia. Fine. Well, then you only have a couple other options. You can rent until home prices come down, or find a way to earn more money and jump on the bandwagon and pay record amounts of prices for your next home. You know, it's up to you what you want to do. But there are options out there for people who still want to become a homeowner. You know, whether or not you want to live in these areas, that's also up to you. And we really are starting to see just more and more signs that things are starting to crack right now. You have the subprime borrowers that took out these ridiculous car loans starting to default on their car payments. Cox Automotive just recently reported that 1.89% of auto loans in January were severely delinquent, which were 60 days past due or more. And that is the highest delinquency rate that Cox has recorded since when? 2006, guys. I mean, you cannot make up this perfect storm right now. It is just almost unbelievable when you think about it. You have so many people say it's not like last time, and you know, it's not going to be as bad and all of this, but every single statistic and data point that we look at week after week is just as bad, if not worse, than 2008. Not to mention, you know, home prices, guys, are literally going down at a faster rate than they did in 2008, by the way. But people don't call that a crash because they haven't seen it yet in their market, or they just haven't felt the effects from this because prices went up so much and they're just not down to the level that people want to see it at. And until people see what they want to see, they won't believe it. But anyways, and a different report from S&P Global Ratings said that 6% of the subprime loans that they track are now 60 days or more late at the end of 2022. And so with that comes along higher repossessions. You have more people losing their vehicles, guys. And so why are people missing these payments? Well, there's no more stimulus checks. There's no more child tax credit payments. And also, you have interest rates on auto loans shooting through the roof, just like any other type of loan right now. So when you combine those three things together, you're going to see the delinquencies go up. And this is just one of those things, guys, that if you're in this category where you need to buy a new car this year and you know you're going to be financing the car, you're not paying cash for the car or whatever, then you need to be shopping around for the best possible interest rate you can get for an auto loan, and it's basically never at the dealership. That's a quick tip for all of you out there that haven't bought a car before, or don't know much about that. You need to shop around for an interest rate just like you need to shop around for when you're getting a mortgage. And typically, one of the best places to get the best deals on auto loans is from a credit union. And if you're not a member of a credit union, you can go to a local credit union and become a member. And those places will typically offer you the best deals right now. So make sure to check out credit unions if you're looking for an auto loan in 2023. And speaking of cars, now's not a good time to be a new Tesla owner unless you just bought one a day ago, because Tesla just lowered the price on their Model S and Model X vehicles again for the second time this year, guys. It's only March. The last time was in January, and now once again in March. You know, you're seeing 2 price cuts in a row on Tesla's most expensive vehicles, and this is not great for people who bought one, say, 3 or 4 months ago. The Model S, they dropped it another $5,000, and the Model X, they dropped it by 10 grand. Let's face it, these vehicles are expensive anyhow. That still means that the basic version of the Model S is still going to run you 90 grand, and the Model X is still going to cost you 100 grand. So these are basically unaffordable vehicles to begin with, and they need a price drop. So speaking of the devil, there's one right there. And we just passed one over there too that was charging. So they're everywhere. You got a lot of Teslas driving around. And Tesla's saying that, well, when they dropped the price of the Model Y back in January, they dropped it 13 grand. And what they're trying to do with that is to get it to qualify for the new tax credits for the Inflation Reduction Act, right? Because, you know, buying new cars is so deflationary. But anyways, the cheerleaders of Tesla are saying this is a great move economically speaking, because times are tough right now and people don't have as much money as they did a year ago, and so dropping the prices should hopefully lead to more sales of their vehicles. And that line of thinking, I think, is actually correct, because just like we've been talking about with the housing market, the only way that houses can become more affordable in a high interest rate environment is prices need to come down, guys. The same economic rules apply to the car market. You have car loans costing even more than mortgage rates in terms of the interest rate you're going to pay, and the only way to make the cars more affordable is to lower the price. So from that point of view, I think that Tesla is making a good business decision here, you know, because that's how you're going to get people to be able to come in and still buy your vehicles when interest rates are high. What does that all mean? To me, it's just another sign that the recession is here on our doorstep, guys, whether you want to admit it or not. Here's just yet another thing that proves that things are not good right now, because even luxury brands like Tesla are having to cut their prices in hopes of making more sales. And think about this, if they've already cut the price twice this year and they don't get the results that they're hoping for, I'm willing to bet they'll do another round of price cuts later in the year, and they'll have to just do what they need to do in order to get their cars sold. And that's how every single business, I think, needs to be thinking right now, is you have to do what you have to do to keep the sales coming in, just like this Fairway Mortgage Company. I'm not saying these guys shouldn't be trying to stay in business and shouldn't be trying to write loans still, because obviously that's their business, but nobody should be taking financial leaps that they can't afford right now just to get a tax credit. You know what I mean? Same thing goes for buying a Tesla. That's really where people need to draw the line and wake up and just say, hey, can I really afford this right now? Or should I be taking this chance right now, buying this $100,000 Tesla or this $500,000 house? Probably not, especially if I already have a nice place to live and my car already works, you know what I mean? But people will have to make their own mistakes and make their own decisions, and life goes on. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video, and if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.